It was an exciting day for the U.S. stock market as we saw the S&P 500 up 1.5%, which was its biggest one-day move since August of last year. We also saw a very big move in the NASDAQ composite, somewhat due to the big surge we've been seeing in Tesla shares here recently, where they've been going up day after day, it seems. And the NASDAQ ended up at a new all-time high. We also saw some positive movements within the Russell 2000, where we went from a bearish posture back to a bullish posture. So that kind of leaves the Dow Jones now as the only major U.S. equity index with a bearish intermediate term posture. So we'll discuss all of that. Then we'll get into our trade application example, where I want to focus on a particular stock from a sector that's been extremely strong so far, but we've been starting to see a little bit of give back here in recent sessions and maybe try to take advantage of that. So with that, let's go ahead and get started. Welcome to the Market Outlook video presented by MarketScholars.com. I'm your host, Brandon Van Zee. It's February 4th, 2020. First of all, if you're new, welcome aboard. Remember to go over to YouTube, click subscribe on our channel, and then check out our description area where you can sign up for our daily email notifications of these videos. We also have a heavy presence on Twitter. I would encourage you to follow me there. My handle is @BrandonVanZee. Thank you to everybody who clicks like and retweet on these Market Outlook related tweets to help support this product over there on Twitter. We really do appreciate that. And then lastly, we have a presence on Facebook as well. Feel free to join our group at the web address embedded in the logo in front of you. All right, with that, let's go ahead and jump into our charts. As you can see, I'm starting off here with chart 6D. This particular chart is going to give us a sense of the various price movements on a day-by-day basis. Just a slightly different visual look to kind of understand what's been taking place within the markets here. I like to show this particular chart whenever we have a big move up or down of more than 1%. So today, as I mentioned in the intro, we were up over 1.5%. And we can use this chart to help us identify when was the last time we had such a big move in the stock market. You can see right here we've got this green bar well up and over this blue horizontal line, which represents the 1% area on the positive. Remember, the red bars would be days when the stock market is negative. Today it's positive, so we're looking at the green bars. And then how far those bars reach towards the sky tells us how big of a move we had that particular day. So as you can see here, we were up 1.5% today, and if we were to try to gauge that with our eyes visually, how far we'd have to go back since we had a similar up day in the market, we'd have to go all the way back here to this candle right here, which was effectively the same type of a move. That was also a 1.5% day. That was back in August. That would have been associated with that candle on the chart right there at a time where we did have a bit of a pullback prior to that in the kind of late July, early August time period, and then that was kind of that stabilization zone. So notice how we have all of those really tall and really low lines there, depending upon which side of the ledger you're on, either positive to the upside or negative to the downside. But the point is, really exaggerated candles that we see right there, or bars. And the same thing could really be said here more recently. We've been seeing more up and down movements where we've seen more extreme movements as opposed to kind of like this period in the middle here where they were largely just going up quietly day after day. So perhaps this is a bit of a shakeout that's been taking place here recently. Now, which way the market goes from here is anybody's guess, but generally speaking, I think most people would suggest that the longer-term market trends are still intact to the upside. So if there is a shakeout that's taking place right now, it might very well be the shakeout of the bears, not the bulls, very similar to what we saw back here in the August time period. So only time will tell on that, but right now, a really impressive bounce there out of the S&P 500 today. Let's get back on track with our normal charting routine now, and I'm going to come over here to chart 4B. For those of you that are premium members of Market Scholars, remember you have access to all 50 of our customized charts. And I did just update, I mentioned this to my dividend growth investing class earlier today, but chart 2A and 2B, I did a fairly important update to last night to include the new dividend stair-step lines on the 64 dividend aristocrat stocks for 2020. So if you are somebody that takes advantage of those dividend stair-step charts and you are a premium member of Market Scholars, go to our tutorial, which you can find in the premium resources area under our tools tab, and there you will see the updated links for that. So just be aware of that. Anyway, this is chart 4B, which we'll use a lot here in the Market Outlook video. And this will give us kind of a bird's eye view at the four major equity markets here in the United States. We've got the S&P 500, which a lot of people feel is the most important benchmark, in the upper left. We've got the Dow Jones in the upper right, which a lot of folks on Main Street will associate with Wall Street. And then we've got the NASDAQ Composite in the lower left. That is the one with kind of the more exciting, oftentimes technology-oriented companies. As I was mentioning on Twitter this morning, I wonder what countdown Elon Musk has been getting more excited about here recently, the countdown to the SpaceX launches, or the countdown to the NASDAQ opening bell, where Tesla shares reign supreme. Really remarkable move for such a large company here recently. And then we've got the Russell 2000 in the lower right. And remember, the Russell 2000 is going to be your small cap universe. So as we look at these, you can see there are some differences right now. There will be occasions when we come into these presentations where everything kind of looks the same. There will be other times where we've got some differences out there, and today kind of represents one of those times. So like I mentioned in the intro, the NASDAQ is doing really well. In fact, we hit an all-time high on the NASDAQ today. It was up over 2% today on the NASDAQ Composite. Let me just give you a quick heads up. I think most of you have probably seen this already, but just in case you haven't, here's the chart of Tesla. Yeah, you don't see this too often. In basically 3 months of time, Tesla has nearly tripled. In fact, at one point earlier in today's session, it was a triple. It had gone from $300 3 months ago to over $900 on an intraday basis. At one point today, it touched a high of about $969. It ended the day at about 887, which was still good for a 13% move higher, just not nearly as explosive as it was on an intraday basis when it was up about 20%. Remember, that follows yesterday's move where we were up 20% on it then as well. Some of you might recall that I did a bullish trade idea on Tesla in this very presentation. I think it was back in December. I'm kicking myself here because I wish I wouldn't have done a bull put spread. I wish I'd have done long calls. Had I known the stock was going to explode like this, of course I would have. But you know, that's why they play the game. You know, the stock market continues to surprise you in one form or fashion on a fairly regular basis. And this is one of the more extreme movements you've seen out of a $100 billion plus company. In fact, at one point today, Tesla's market cap was larger than McDonald's, just to kind of give you an idea of how the stock market is valuing Tesla right now. It's larger than GM and Ford and several other automakers combined. Whether this is a bubble or not is anybody's guess. Obviously, there are strong believers in Elon Musk and his vision of the future towards a less carbon society, less of a carbon footprint, I should say. There are others that believe this is just merely a short covering rally. And as all the short sellers that did not believe in the company rush for the door at once, it creates this avalanche of buy orders that basically just overwhelms the market makers, and all the buyers are overwhelming the sellers, and stock price needs to kind of rectify that by going higher. So, you know, where we end up is anybody's guess, but just be aware of it. This is kind of the talk of the town, so to speak, right now, what's happening with Tesla, and then that does have an influence on the NASDAQ, although it's not just Tesla. You know, even a big old lumbering giant like Microsoft. Take a look at that move in the last couple of days out of Microsoft. It's gone up $10 per share in just 2 days. So, you know, they're certainly not alone in terms of Tesla leading the NASDAQ higher. There are certainly others out there that are helping it along, but NASDAQ without a doubt has been the strongest performer here. The S&P 500, with its 1.5% move higher today, one thing to be aware of is it did change the color background of the chart from pink to green. In fact, that's a dark green, telling us that we have a strongly bullish posture on the S&P 500 again, and we do have that green moving average line, which tells us we got price above a rising moving average again. The Russell 2000, you'll notice, is a little bit different. Remember, the Russell 2000 small cap down here in the lower right-hand corner had fallen out of the bed, you know, on a much larger percentage basis than some of these other indices. And so it actually went to a point of being in that dark pink right there, which signifies a strongly bearish posture. Well, with today's nice snapback rally, you can see the Russell 2000 was also up 1.5% today. We were able to change that posture back to weekly bullish. So remember, that's different than what we're seeing on the NASDAQ and on the S&P 500, where we have strongly bullish postures. This is just a weekly bullish posture, and it's also worth mentioning that we remain below a falling moving average here. Notice the moving average color itself is red, signifying that. So we might very well run into a little bit of resistance there on the small caps here in coming days. We'll just have to keep our eye on that situation. And then we have the Dow Jones, and it looks different than the others as well, in that the Dow Jones remains with a strongly bearish posture here. Notice that deeper shade of pink on the background color there, signifying that that green intermediate line that kind of, basically forms our posture for us here with these videos is trending lower and is below 50 at this point. So it suggests that we do have a strongly bearish posture on the Dow Jones. However, on the plus side of the argument, or for the bullish side of the argument, you can see that after the back-to-back winning sessions the Dow Jones Industrial Average has had the last couple of days, we are back above a rising moving average. So kind of conflicting signs there right now in a couple of those instances. We've got the Dow Jones above a rising moving average with a bearish posture, and then we've got the Russell 2000 below a falling moving average with a bullish posture. So there's conflicting signs out there. That happens a lot when we start getting into these slop and chop types of moves in the market rather than just the consistent plodding higher like we had been experiencing in the previous months. And these moves will get rectified one way or another. Either we'll start seeing more breakouts to the upside like we saw with the NASDAQ today, or you'll start seeing resistance form and push lower. And a lot of it, of course, depends upon the headline news out there and things like earnings. Google came out with earnings that were pretty bad here yesterday. We had other earnings coming out today after the bell, like Disney, that helped support the market to the upside. So earnings can certainly impact the overall indices. We also have the threat of the coronavirus still lingering on and perhaps disrupting economies around the world as well. So a lot of things going on right now, but as I mentioned before, our longer term trends do remain intact here to the upside. So I think if you're leaning one way or another, you're guessing that this gets resolved to the upside at some point. All right, let's go ahead and take a look at some other charts here. You're going to take a look now at the 3 green arrows setup, which is chart 4D for those of you that are premium members following along at home. All right, so as we look at this particular chart setup, you'll notice that we only have one chart right now that has either a pink or a green background color. And that chart is right here, the Russell 2000. We have a pink background color in the lower right-hand corner here, and that signifies that we have a 3 red arrows signal. For those of you that are newer to that term, our arrow system here that you hear us talk about, that many of you probably are familiar with your previous association with David and I at our other company that we used to work for before Market Scholars. The 3 green arrows system is effectively a fancy way of talking about 3 different technical indicators and trying to determine whether they line up bullishly or bearishly at any given time to try to give you a better sense of whether this is a good or bad time to be looking at trend trades. Well, anyway, the 3 different moving average that we look at, or the 3 different indicators, I should say, that we look at for this is the 30-day moving average. That's one of them. So when price is below a moving average, like it is right now on the Russell 2000, you can see a red arrow comes into place. So that's the first one that we're going to check. What's the moving average telling us? Well, with the Russell 2000, we got a red arrow. The next thing that we're going to check is the MACD histogram. That gives us a sense of where the momentum of the candles are here currently. And when we have a red arrow, as we do here with the Russell 2000, that means that we have negative momentum. And that makes sense. This is a stock that is struggling to, try to, find some sort of support or even keep itself afloat. Right now, it's still below that moving average. So on the whole, this stock today is trading below the average of, where it would have been in the last 30 sessions. That's not a great sign if you want to be bullish on a particular security. And then lastly, we also look at the stochastic, which is kind of a measurement of where is a stock trading within a given range, with the idea that if a stock is trading in the upper halves of the ranges over time, that's a bullish phenomenon. And if the stock is trading in the lower half of ranges over time, that's a bearish phenomenon. And right now you can see we have a red arrow there as well. So that does line up for our 3 red arrow system on the Russell 2000. On all of the other charts, we have a mix of signals. So as an example, here on the Dow Jones, we've got a green arrow on the moving average, a green arrow on the stochastics, but we still have a red arrow on the MACD. In fact, we've got a red arrow on the MACD on all of our other charts. So here's the red arrow on the S&P 500, and even on the NASDAQ, where we've seen some better strength, you still have a red arrow that's in play on the NASDAQ. But as you can see, that one's getting very close to the zero line here. So if the NASDAQ does continue to go up in the coming sessions, you are likely to see it revert back to a 3 green arrow status before any of the other charts. So be on the lookout for that if that is what is to unfold in coming sessions. All right, let's go ahead and now take a look at some other charts. Let me take a step aside here and go over to the internet quickly, and wanted to say thank you to those of you that clicked like for me the last time we did these videos. As I mentioned in the intro, it is very helpful for David and I to have support of this product on social media. Remember, it takes up significant portions of our working day, and these are free videos, and so we need a little bit of give and take there in terms of our audience. If you guys can help support us by taking 5 seconds out of your day to click like, that will encourage us to continue to do these videos as often as possible for you. If we find that we're starting to lack the support that we would desire for these videos, then we'll start stepping back and perhaps not doing them as often, or not doing them for quite as long. So the deal that I've been making with you guys more recently is, if you guys can get me 100 likes on Twitter, I'll give you more of the full-fledged 30-minute variety of this video. So it gives you a way to vote for what you want as the audience. If you want a 30-minute version of this tomorrow when I do this presentation, click like for me tonight on Twitter. If you don't want the 30-minute version tomorrow when I do this presentation, then just don't do anything. So if there's less than 100 likes, I'll assume that you want like a kind of a more abbreviated 15-minute version of this video instead. So I'll leave that up to you guys to decide, but I appreciate those of you that did click like for me last time around. I will add that bullish swing trade that we did on Lululemon a week ago has already exited at max profit. Remember, at that time, the markets were not necessarily all that bullish. We were kind of going against the grain. I'm bringing that up right now because today's trade is going to be somewhat similar to that concept, where we're going to be going against the grain a little bit. So just keep a pin in that thought until we get to our trade application example here a little bit later. Also, while we're over here on the internet, did want to share with you the latest version of our sector selector tool. Remember, this is a two-part tool. This is the upper half. There's a lower half that goes into much more detail that all of you that are premium members of Market Scholars can access on the Tools tab of our website. Anyway, this gives us a general sense of any sort of sector rotation that may or may not be taking place. We didn't really see a whole lot of changes this week. In fact, you'll see that the top 3 remain the top 3. The bottom 2 remain the bottom 2. Where we had some movement was kind of in the middle of the graphic there, where we did see staples make a nice surge higher, and then we saw industrials really fall quite a bit there. A lot of people have been keeping their eye on Boeing and other kind of transportation-related stocks, especially with this whole coronavirus that's taking place here as well. So anyway, quick little recap there on the sector selector. Let's try to get a sense of what's been happening on a sector-by-sector basis today by coming over here to chart, which one is it? It is 5C. This will be our 12 grids. Now remember, when we're looking at these 12 grids, the background color of the chart will tell you whether we have a bullish or bearish intermediate term posture according to the market forecast technical indicator. So as it stands right now, we do have 3 different pink charts on the board. We've got communications up here on the top rung, that's pink. We've got energy in the middle rung, that's pink. And then we've got real estate on the bottom rung, that's pink. The one that looks the worst, I think even a third grader would be able to tell you, it's energy. I mean, energy has just been absolutely blitzed here recently. It seems like we've been piling up these oversold cluster signals with very little response to those cluster signals. In other words, no reversion to the mean type of a movement that we've been experiencing so far. So things have been pretty ugly there. It's interesting that the plunge in oil and gas names is occurring at exactly the same time as the Tesla chart is erupting to the upside. And some folks would say, well, that's, passing of the baton of sorts, where we have an electric vehicle future and fossil fuels are going to go the way of the dinosaur. I think that's a little bit of an extreme thought. These things tend to work in cycles, but that mindset seems to be taking hold right here, right now in the stock market. So the energy complex has just been getting smoked. These other two, I wouldn't really concern myself with too much at this point. Communications probably got hit a little bit more recently with those Google announcements or what have you. And then real estate, it might just be a situation where they're not going up at the same rate as some of the other areas. But as you can see, both of those actually remain above rising moving average. So in cases like that, I recognize the posture of bearish, but I don't necessarily take action on it. Whereas when you start seeing breakdowns of support, like we saw with energy here a few weeks back, when we were breaking below that candle about right there, that's much more of an emphatic kind of take action type of a moment in the stock market. So we'll see how things shake out there. You'll also find that there's an area here like healthcare that has a bullish posture but has a red moving average telling us that price is below that falling moving average. And then I also did want to point out the financials for being about the same. In other words, bullish posture according to the market forecast intermediate line, but falling moving average right there. So there might be some resistance right there on the financials. We took a bearish trade on one of the big banks here a couple of weeks ago in my swing trading class, and that worked out very nicely. Perhaps a few more of those are setting up right now. Remember, I'll be teaching my swing trading class tomorrow at 11 a.m. Eastern Time if you want to join me for that, if you're a premium member. Also, the dividend growth investing class where we focused on the real estate investment trust world here earlier today is now posted to the calendar if you guys want to check out what REIT we bought there. And it was the first time we bought that particular REIT since we started Market Scholar. So a little bit of a new name there. I won't spoil the surprise, but check that out if you're interested. Anyway, take a look at utilities here today. Utilities were down 1% today. I want you to kind of put a pin in that and think about that for a little bit. Remember, the utilities were very unique in that I was counting for you guys and felt a little foolish doing so. You got to embarrass yourself every once in a while, right? But I'm counting out day after day after day on these presentations, and we counted out like 9 days in a row where utilities were up. It was very, very abnormal. That's not typical behavior for the utilities. That happened during a time when the stock market was really struggling as well. So all of that very peculiar behavior has kind of led to a little bit of an extreme movement to the upside that probably wasn't deserved. I don't have anything against utilities particularly, but it does make you wonder if the utilities got a little bit over their skis to a degree with that movement there. So we're going to explore that idea a little bit later with our trade application example. Before we do that, let's take a look at a few other charts here. And we're going to take a look at 5A. This one will be our asset class 12 grid. As you can see, there's a handful of pink charts on the board here in the lower right-hand corner. We've got high-yield bonds. Remember, those are junk bonds, and those are very closely aligned with oil and gas companies. So when you see this chart directly below high-yield bonds, which is why I structured this 12 grid the way that I did, so it's easy for our eyes to identify, when you see oil getting smoked the way that it has here, we should not be surprised that high-yield bonds are underperforming, like government bonds as an example. So if oil and gas can ever turn around and start heading higher, at that point, I would expect that an ancillary play would be to go into junk bonds at that time. But until that happens, you're kind of rolling the dice a little bit more so. So anyway, high yield bonds and oil both getting smoked. We do have REITs, as I mentioned before, also struggling to a degree. I wouldn't really go out of my way saying that's tremendously bearish, but nonetheless, they have a slightly bearish posture. And then the 10-year U.S. Treasury yield has been going lower in the last couple of months and therefore does have a bearish posture as well. But all the other charts do have a bullish posture. Some of the charts look better than others, as is typically the case. The S&P 500's bounce here today puts it back above that rising moving average, whereas when we look at the foreign stock market, notice developed foreign markets here, EFA, so this would be things like Europe, Australia, Japan, etc., that continues to have a red moving average there. So that means price is below that falling moving average, so perhaps a little bit of upside resistance on the horizon. And the same thing can be said for EEM, which is the emerging markets from a foreign perspective. You can see that we had a really nice day here for EEM. It was up 2.58%. But of course, that's one of the worst looking charts from an equity perspective on the board because it contains China, and China has been at the epicenter of this whole coronavirus. So we'll see if that eventually subsides. If it does, perhaps there's opportunities there in the emerging markets. But until that gets flushed out of the daily news headlines, you'd have to believe these are a little bit more precarious types of trades here, where we've got a nice dead cat bounce here, but we remain far below a falling 30-day moving average, and so I'm not sure how much you can trust that type of a move at this point. All right, let's go ahead and now take a look at another set of 12 grids. In this case, we are going to look at the global stocks, the major ones at least, here with chart 5E. So as we look at these around the globe, you can see it's mostly negative price action. We leave the S&P 500 in the upper left just to compare it to everything else around the globe. And one thing you should probably be identifying with your eyes is that that is the best looking chart on the board. We are very fortunate here in the United States to have the markets that we have had, not just now, but in recent years. We've really had an outperforming stock market, and we haven't felt the negative effects of sliding markets that a lot of others have experienced around the globe. So I know it doesn't always feel that way if you are an American-based trader, because the markets will go against you occasionally as well. But take it from me, you are in a better position than a lot of other foreign markets, at least you had been in recent past. And that continues to be the case right here as well, because the S&P 500 is the only chart on this particular 12 grid that has a dark green background, meaning that you have a strongly bullish posture according to the market forecast, and you have price above a rising moving average with that green tip of the moving average right there. You'll notice that we do have three other weekly bullish postures on the board. That's Japan, France, and South Korea. But in all three of those cases, they are not strongly bullish, they're only weakly bullish, and all of their moving averages are red. In other words, price is below falling moving averages there. So if you're looking for strength around the globe, right now you're probably looking in the United States. All right, with that out of the way, let's now get into our trade application example for this presentation. I'm going to come on over here to chart 3A, which is the chart that I oftentimes will use for swing trading purposes. And I'm going to pull up ticker symbol NEE, NextEra Energy. Now, some of you are familiar with this company. In fact, it used to be the old Florida Power and Light. It's actually got a very good track record of raising dividends and other things that utility investors tend to like. In fact, we also own this one in my paper money account for my top-down trend trading class, and it's done really well for us over recent months. But, as I mentioned before when we were talking about the utilities generally, this one seems to have gotten a little bit ahead of itself. And I want to kind of explore that idea, particularly since we much more often do bullish trades and our portfolios are a little bit bent bullishly as opposed to bearishly. And so having a little bit of offset on occasion when you identify opportunities can make some sense to have a little bit of balance there. And what caught my eye with this particular trade, or this particular chart in this case, is that it's giving us what is known as a bearish near-term divergence signal. And coincidentally, the start of that signal also has somewhat of a bearish condition attached to it with that overbought cluster signal. So notice that we have this red dot above the candle here on the 27th of January. That occurs when we have the green, the blue, and the red line on the market forecast all in the upper reversal zone on the same day, telling us that we have a little bit of an overbought condition. Well, this one continued to meander a bit higher before giving up the ghost. The last 3 days has rolled over, and now we started to break down to about a 1 week low at this point. We did touch a high just 2 sessions ago, but you can see we clearly have a close below the low of the high day with today's candle. And you can see the background color of the chart went from blue to pink, signifying that we no longer have a bullish near-term posture. That's the blue line on the market forecast. It's now considered bearish with that blue line going straight down, as you can see down below here. So the bullish near-term divergence that I was mentioning before occurs when you have a lower high, a set of lower highs on the near-term line. So notice that this peak right here that I'm circling with my mouse is higher than the follow-up peak that occurred right here on the 31st of January. I'm sorry, so this one is higher than this one. So anyway, and I hope I said that the right way. I think you guys get the point if you're looking at the chart. This peak is higher than this peak. So we have a lower high on the underlying indicator. Now, at the same time, you look at the candlesticks that are associated with those 2 points. You're going to look at this candle associated with the first peak, and then you're going to look at this candle associated with the second peak. So here you have a situation where price went up at the exact same time as the underlying indicator went down, associated with an overbought cluster signal and associated with a freshly minted bearish near-term posture as well. So we'll see how this plays out. See if maybe the utilities got a little bit ahead of themselves. It is true that this is still a market-beating stock over the last 3 months. The S&P 500 is way down here. This one's way up here. So just like any trade, this one comes with plenty of risk, but it's at least worth exploring from an educational and paper money perspective. So what I thought we would do here today is what's known as a long put spread. This is a debit spread, right? So this is not some of the credit spreads that you'll hear about with the put side when those would be considered bullish. This is considered a bearish trade when you're taking money out of your pocket and applying that from a debit perspective to a put spread. And what I've done here is I've tried to identify one strike that's in the money and one strike that's out of the money. This stock closed at 264.54 today, and so that means that the first one that is in the money, first put that's in the money, is the 270 strike. The first put that's out of the money is the 260 strike. So this will be a $10 wide put spread, and you can see we're going to spend about $5 for it. So if you spend about $5 on a $10 wide spread, that means that you have approximately a 100% return possibility if you think there's a decent chance that, in this case, NextEra Energy can close below 260 on expiration date. Now, I'm using the March monthly contracts here, so that is 45 days away, so we have to be cognizant of that as well. It's entirely possible that NextEra Energy could continue to fall for the next week or so, but rebound by March. So you'll want to be on the lookout for that as well, but at least this is an opportunity for us to explore a rare bearish trade here and kind of go against the grain of what the market did today a little bit, with the expectation of perhaps we're not quite to blue skies yet with the stock market. So I'm going to go ahead and place that trade by clicking confirm and send, and then we'll see if we can get filled on that first thing in the morning. All right, well, thank you for joining me here today. Again, it was a great day for the bulls. We had our best day in the S&P 500 since going all the way back to August of last year. So bullish uptrends remain. There's still some areas of concern out there, and we want to keep our eyes on those. But for the most part, we have a decently performing market here, and we want to kind of do our best to keep our eyes on the coronavirus and some of the earnings that are coming out. But for the most part, happy with the way things are going here. So with that, I want to wish you all the best of success with your trades and your investments. Remember, if you got value out of this and you want to see me do a full-length video tomorrow, make sure you click like for us there on Twitter. I'll have it pinned to the top of my timeline. So with that, have a great rest of the night. Take care, everybody. Bye-bye.